morning, this is Federico Bentley from Ayondo Markets giving you this morning's market update. This morning we start by focusing on Glencore Xstrata after more than £2 billion was wiped off the company's value overnight after a note from analysts at Investec questioned how much the company's shares would be worth if the price of metals fails to rise. Shares closed 29% down in London at 72p. Overnight took a battering in Asia with its Hong Kong listed shares plunging by just short of 30%. There have been concerns as last week of trading in September has been particularly harsh for Glencore, as the company has seen its price crash to the £1 level and officially turning into a penny share, as confidence in the Chinese economy's ability to halt the slide in growth continues to wane. Optimism for mining sector stocks has been equally bashed. Now looking at European markets, the UK 100 rollings trading 25 points below, the France 40 rollings 10 points lower, and as for the Germany 30 rollings 50 points below this morning's open. Now skipping across the pond, Wall Street rolling fell over 300 points, or 1.92% to 16,002.2. The US 500 lost almost 50 points, or 2.56% to 1,881.85. And the US tech rolling dropped over 142 points, or just over 3% to 4,543.97. Now looking at the oil sector, Royal Dutch Shell has halted oil exploration in the Arctic after a $7 billion quest failed to yield enough crude to justify continued spending. The venture has been a very costly error and will damage the company both financially and reputationally, according to Deutsche Bank analyst Lucas Herrmann. Shell said it's likely to take a further $4.1 billion hit as it withdraws from searching the area, which is in the Chukchi Sea off the coast of Alaska. Its ill-fated explorations in the Arctic region were also put on hold in 2012 when a drilling rig broke free, with oil prices still low a year after they were halved from $100 a barrel of Brent crude down to under $50 a barrel. Every part of the industry is under strain. Share prices across the sector have slumped, with Shell down 36% in the past year and BP down 26%. Shares in oil companies have fallen so far that some experts are now suggesting the market has overreacted. They're in danger of becoming underowned, says David Miller of Cheviot. The biggest risk now is further falls in the oil price. The direction of oil is impossible to predict, but some experts think prices are set to stay low. China's slowdown could keep demand low, and Iran is also hoping to get its oil back on the world market as soon as possible, as it needs the money. Oversupply on the world market could persist through next year, and investment bank Goldman Sachs has predicted the oil price could halve again, down to at least $20 a barrel. Now for some economic data, we have at 9:30 the UK consumer credit and mortgage approvals. At 1 o'clock we have Germany consumer prices, followed by 2 o'clock over in the US we have home price indices, and at 3 o'clock we have US consumer confidence. That's all for today's news, so thank you very much for listening and all the best on your day's trading.